We're talking about Exxon, oil companies, energy, and we'll kind of stay on this topic for a little while. We'll talk about three oil companies, if not more. If you want to talk about any others, talk about Exxon, Equinor, and CVX, Chevron. Now, what has been happening is oil has been going up in price. I know one major story that's out there is that the sanctions on Russian oil are taking oil off the market, and that's driving some of this increase in oil price. Now, looking at the 12-year, it's still not like where it was, even back in April of 2024. You see that oil prices were really relatively lower. If we look at the 5-year, in 2022, it went up. Oil prices went up when the stock market was really going down. And so if oil prices over the last month have increased, substantially, going from, let's call it 70 to $76.55. That's almost a 10% rise. The increase in oil price immediately increased revenue, profit, cash flow. Those are all good things for an oil company. So why is it that on a day, and I'll look at, here's where year to date, energy is number one. Okay, that makes sense. Oil prices are up. Stock prices on other sectors have been going down because interest rates are up. The market's really expensive, but energy companies have been down. Now, Exxon was down, but Chevron was up. Shell was up a little bit. Looks like Total was down a little bit. Equinor was down a little bit. So not everybody was having a good day on Friday. It looks like EOG Resources and Chevron had a good day, but Exxon did not. What gives? How come Exxon's not catching this rally? Let's take a closer look. So over the last, let's go year to date, Exxon is down 0.96%, where the rest of the sector is up almost 6%. So that's kind of unusual. Is there anything out there that is like bad news, right? So very bad news for dividend stocks. I don't think that's bad news. So I guess Exxon provided weak guidance for the quarter that just ended, and they're going to report it. When's Exxon going to report? January 31st. So in 3 weeks, they're going to be reporting. And when they report, they were guiding that, hey, our quarter wasn't that great. All right. That's fine, because we know that oil prices, I just showed oil prices were bad in the second half of 2024. So that's kind of baked into the stock already. Exxon has historically been just a good company. 468 billion in market cap. Over the 5-year, it's up nicely, 52%. And then you get that dividend. So that isn't too bad. Over the last year, along with Chevron, these haven't done great. It's up maybe 7%. You get that dividend, you're above 10%. I don't know that anybody would complain about buying a value stock, a dividend stock that is rising. This pullback to me, Kiter, looks like an opportunity to me. If I liked Exxon, and like I own a lot of Chevron, so I'm not buying any more oil. But if, let's say, I didn't own a lot of Chevron, let's say I owned a little bit of Exxon, I'd be buying more. If I owned a moderate amount of Exxon, I'd be buying more. If I own too much, I wouldn't be buying any just because I own too much, which is my condition with Chevron. I probably own a little too much of Chevron, and it's been going up, which is good. But I see this as an opportunity, and look at the dividend rate. It's almost 4%. So you got almost 4%. Analysts think it's discounted. I can assure you, if I ran a discounted free cash flow analysis, this would be discounted. These guys just make good cash. I think the current environment is going to enable them to grow their top line revenue where oil prices are higher. They're going to grow revenue. And in growing revenue, they're going to grow profit. And they're going to grow free cash flow. So that pullback is like, I don't see any big news where it's like, oh no, Exxon, like some of the big nightmares for oil companies. One of their oil tankers ran into, some reef and is spilling oil in the ocean. That's a big, giant problem. If that happens, oh no, a quarter of the market cap's gone, because they're going to be sitting on so much expense to clean that up that public's going to kill them, right? But that's not what we're not dealing with any of that. We're just like, hey, oil prices are higher. The market's selling this off. Management's kind of pushing down expectations for their earnings call. That's what I would be doing. What do you think?
The only thing, and I was not coming prepared to this discussion, so I didn't dig in the old news, but I know that they were looking into acquiring some assets or company in Africa, in Ghana, and now I see that they are exiting these activities. So this is maybe something that hang the stock the background.
I think that could be a little bit of bad news, but I mean, most of Exxon's operations, right, are U.S. based, and then they have some foreign assets, like they have reserves in other countries. And I mean, domestically, these guys are getting it done. Look at the P ratio, 13, forward P 14. They're paying a 3.72% dividend. These guys are paying out 49% of their profits toward their dividend. So buyback yield. Are they buying back shares? They probably are buying back shares, which would also be a positive, right? If you have fewer shares out there, your stock is going to be worth more. So it looks like their shares are going down. Although, what's up with this? How come the share count went up in the trailing 12 months?
That's what I told you, but we need to take the time to investigate further. But I think that they are trying to do some big acquisition.
Yeah. Yeah. I don't see any big problem with the company. I think very highly of this company. I think they're a quality company. I think we know what we're buying when we buy this one, or we buy Chevron. So we could take a look at Chevron. These are two very well run companies. This company historically was located in California, but they're going to move to Texas. They already announced it. They're going to say, hey, we're out of California and we're going to go to Texas. Not a big deal. Good luck to them. I'm a big stockholder. No problem. This was my employer, my first job out of college. They acquired an oil company.
Okay. Victor, while you were, I was searching at the background, and they were acquiring Pioneer Natural Resource, which is another huge company. I see that in the news, they are saying that the deal size is $64 billion.
Wow.
Including debt and everything. So that can explain Pioneer shareholders will receive 2.3 shares of Exxon for each Pioneer share at closing, blah, blah. So that may explain the dilution that you were pointing to.
And to me, that's not a bad thing, because you're making your company bigger, more valuable, and you are issuing out more shares. But it's kind of like you have bigger slices of the pie now because you have more shares, but you made the pie bigger. So it's like you get just as much pie as before. Don't worry. All right, good. So following the stream of thought here, and I think the oil trade, right? If oil prices, obviously, if they continue to rise, Chevron's going to continue to rally. Chevron's paying over 4% dividend. It's discounted, and I agree with the discount rate that these analysts have. I actually have a higher discount than that, and I can show it to you. This is a major cap company. Exxon's bigger. Exxon's the biggest one in the space. They're going to announce on 31st. And I like where Exxon's at. I don't think I'll ever sell my stock, because just oil is oil. We're going to need it. I've heard about, oh, we're going to move from oil to something else. I've heard that for 30 years. And we keep consuming more oil. So we're going to keep consuming oil. The good news is, like, I bought a car for our family, really for my wife, on about 2 months ago. And she wanted the same car that I bought her 13 years ago. The same brand, the same model. And the fuel efficiency went up like 50%. It's like, wow, that's really good. So we're doing more with each gallon of gasoline or diesel. So things are getting better. And then there's hybrids now that give you really good gas mileage. But the fact is that more people are buying cars. So you have better efficiency, but more people are buying cars. And of course, we use it for plastics and stuff too. So it is not going to go away anytime soon. So I will gladly buy an oil company. Equinor is an oil company in Norway, and Norway is fortunate to have oil reserves in their territories. I think that most of their oil reserves are offshore, and they are smaller than Exxon and Chevron. They're about 70 billion in revenue, in market cap, 105 billion in revenue. Dividend 11.4%. That is crazy. PE 7. Oh my God. And Shadow Guy asked about this, so I wanted to cover it. And they are paying out a high rate on that dividend rate, but that's a high dividend. The stock over the last year is down 17% and hasn't really performed all that great over the 5-year. One thing that I find uncomfortable is that Equinor is, for the most part, being controlled by the country of Norway. And I have very little to say about Norway, other than I think it's a really neat country, and I think a lot of their history is really, really interesting. I have nothing negative to say, but even if the U.S. government was involved in, let's say, Chevron, I wouldn't like it. I'm like, you know what? Government should be government. You guys do your own thing. You make sure that we have, infrastructure, that everybody needs built, and you have an army to defend the country, all those good things, but stay out of my oil company. So I don't like that about Equinor. Is if the country of Norway is involved, I don't like it. And I don't know that other investors, most investors feel the way I do. I'd rather let just the company operate as they should. But it's an interesting stock, 11%. Wow, it's a booming dividend. And these guys are probably discounted, like analysts are saying. Oil companies are being sold at a discount. I mean, look at this PE, 7.4. And I think that they do have a ceiling, right? We're not expecting, Exxon to double in market cap and become another $1 trillion market cap company. If oil prices went up to like $200 a barrel, you better believe that's going to happen. But I don't think that's going to happen. They'd be very fortunate, and the world would be crippled by that type of oil price. The economies would. So I don't think that's going to happen. And I think that modest growth and appreciation in the stock is what I would expect. That's what I expect out of Chevron. But I'm glad to be a Chevron stockholder. And if I think of Chevron and Exxon as very similar. You're buying Coke or Pepsi. You're buying the same businesses. It's two decisions, right? Do you want to be part of the industry, and which company do you want to own? If you own either one, you're doing just fine. But this one does provide, I think, an opportunity. If the stock price is going to be sold off like this, I'd be buying, or I'd be holding. In my case, of Chevron. Chevron's had some pullbacks here. I did not buy any shares because I just own plenty. I'm like, I don't want any more Chevron.